Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Kate Campbell, welcome to this episode of the Australian Finance Podcast.
It is fantastic to be back, Owen,
it is.
To talk about ETFs.
Indeed it is. It's always fun when we get to dive deep into a topic, but more so when it is an ETF or a company or something that people can actually invest in. Today's episode is brought to you by Betashares, a long-term sponsor of the Australian Finance Podcast. Thank you very much. And we're going to be talking about the Nasdaq complex, if you will. We're going to be talking about two funds in particular. We're going to be talking about JNDQ as well as NDQ, the ever popular ETF on the show. If you do like this episode and you want us to do more ETF deep dives, write into us. There is a link in your show notes that says ask a question. You can use Spotify feedback, or the best place of all is to head to the Rask community. It's a free community that you can join and you can discuss all of these things on the fly with myself, Kate, or anyone in the team. We'll be there to greet you. One of the things to keep in mind is that neither of us own JNDQ. Nope, I do not own NDQ. And this is both a disclosure, but it's also a disclaimer to say that we're not necessarily making recommendations. In all of the review episodes that we've ever done, we don't do them as a recommendation. If you want to know whether or not you should invest in something, you should speak to a financial planner, and you should definitely refer to the product disclosure statement and TMD, Kate, that is available on any of the ETF providers' websites.
These are more of an educational overview into how ETFs work, and we pick a couple of ETFs to illustrate the examples.
Yes. So we are going to be talking about the tech-heavy Nasdaq Stock Exchange, and in particular these two ETFs. We're recording this on the 13th of May, and some of the data may or may not be exactly accurate by the time you hear this, or by the time, or even when we're recording it. We just cannot guarantee the exact accuracy of every data point that we bring up.
Yeah, I mean, some days we've recorded and later that day the holding list on an ETF provider's website has been updated. So it's definitely something you want to go straight to the source, go to Betashares' website, type in the name of the ETF you're interested in, and you'll get the most accurate information. So today we're talking about JNDQ, well, that's one of the ETFs we're going to talk about. And that's an ETF that invests in the 100 largest Nasdaq-listed non-financial companies by market capitalization outside of the Nasdaq 100 index. Oh, and that was a lot of words in one sentence.
So basically, people are familiar with the NDQ ETF, which we'll get to in a moment. That's the Nasdaq 100. We're talking about that next 100 of companies. So this is the JNDQ ETF. And as you'll discover in a little while, one of the reasons that this ETF exists is because some investors like to look further down the market, go down into smaller companies, so that then they can hopefully capture some of those companies on the way up. Now, given that this is an ETF and it focuses on 100 to 200, what you will find is that companies do graduate out of this ETF and into the Nasdaq 100, which is the big brother, so to speak.
And what's the non-financial element of that?
Well, that's very common for Nasdaq-related indices. So it's actually very common because most of the people that would be investing on the Nasdaq do like to have companies that are focused on healthcare, on IT or communication services and those types of businesses rather than any sort of financial companies. So that's kind of what the Nasdaq is known for, and that's pretty common for these major headline indices on the Nasdaq. Yeah.
Which is quite different to our ASX, where if we look at the top 10 in an ASX 200 ETF, a lot of those companies are financials.
Yeah, they are. And you find that we end up with a skew towards financials and resources here in Australia. So if we had the equivalent of this, you would have the ASX 200 non-financial companies. And so it would be still biggest equals the biggest pie, like the biggest company, it gets the most share of the ETF. But in this case, it's just excluded part of the pie and just said whatever's left, pick the biggest ones of those. And there are a few other rules that go into this. And the ETF is called the Nasdaq Next Gen 100 ETF. And you can kind of get a sense of what this ETF is trying to do for investors. It's trying to kind of like be added on there for people who are willing to look further down the market. And I think I may have even said this to the Betashares team, is like, I would love a Nasdaq 200 kind of product as well, because we're so familiar with the ASX 200 here in Australia. The Nasdaq 200 would be cool, but this is a way to kind of bolt them together if you wanted that overall exposure.
Yeah. So I thought maybe even we could touch on what is the NASDAQ.
Yeah, sure.
Because that word is thrown around a lot if you see it in the media. And it stands for the National Association of Securities Dealers Automated Quotations. So
wow,
another really long title.
Yes, it is indeed.
And it's a global stock exchange with over 4,000 companies listed on it, so quite big. It's been around since 1971. They say they were the world's first electronic stock market, so not the world's first stock market, but electronic one. Mm-hmm. And they are based in New York.
Yeah, it's an interesting thing, isn't it? Because 4,000 companies, the Australian market has about 2,300, give or take, but our companies are much, much smaller. But this is only one of the American stock exchanges. There are quite a few, and many people will be familiar with the Nasdaq Stock Exchange or the Chicago Board of Exchange, CBOE. Those are very big exchanges as well. Here in Australia, we do have other stock exchanges. People just think it's the ASX, but we do have our own smaller exchanges as well. So basically what you're getting is you're saying the companies that are on that particular stock exchange, and that exchange is in the United States. It's been around for quite some time, Kate.
Yeah. And really interesting, just a bit of nerdy history. From their website itself, they said until the NASDAQ, markets had relied on physical trading floors where traders played phone tag to discern estimated prices of over-the-counter stocks. NASDAQ, however, this is what they changed. They disseminated up-to-the-minute price quotations nationwide via a computerized network, allowing for unprecedented levels of access, accuracy, and ease of trading. So you've probably seen those pictures in the news of everyone shouting in white lab coats on the stock exchange floor.
Yeah, and that's what that is. We used to have that here in Australia. There used to be chalkboards here in Australia where the prices would be written up on the big boards, and everyone down below could see what the prices were of BHP, and they could exchange notes and these types of things. So the traders on the floor. Obviously, the computers, I should say, have changed the game in that you can get matched through a centralized stock exchange that's digital, not physical, which means that it's much more efficient and much more, as they say, accurate.
And that's why we can now log on to our brokerage app this second, because it's 11:50 a.m. and I can buy a share or an ETF right now within seconds.
Yes, you can. And this has obviously paved the way for many other innovations that have come, things like ETFs and those types of things. They wouldn't exist unless we made this migration across. And that's also why it's kind of like technology is in the DNA of NASDAQ. That's why you have so many great companies choosing to list there, particularly through the .com era. And even earlier in the 90s and 80s, you see companies that are household names. And my pop quiz, before we move on, Kate, my pop quiz, which I forgot to give you at the top of the show, was what do you think is the biggest company in the world right now at the time of recording? I'll give you a hint. It's in the NDQ ETF.
Apple?
Close.
Tesla? Nvidia?
No.
Oh.
You're very close there. You're like
Amazon.
Oh, you're in the kind of general bucket. There's one name in there. I'll give you a hint. We don't use it here at Rask.
Microsoft.
Yes, Microsoft. It is Microsoft. And it has recently overtaken Apple as the biggest company in the world. It's because Apple's performance has been pretty poor lately, and the company's slowed down. But that's an example of a company that was very early on tracked by NASDAQ investors and was a trailblazer in many respects of software companies making their way onto the NASDAQ exchange. So there are many companies that have followed in their footsteps. You mentioned a few of them just then, including Tesla, which we'll come back to in a moment. So the ETF this is a JNDQ ETF we're talking about, started trading on the 20th of February 2024. Its management fees are 0.48%. It's still a relatively small fund. It's just started. It has about 100 holdings. And most ETFs, even though they say like 100 or whatever, it doesn't always exactly have 100 because some can be on the way in, some can be on the way out.
Or they list cash in Australian dollars and US dollars as a holding as well.
Yes. The ETF registry, if you do buy this ETF, the ETF the registry, the place where you would go to log in and to check your dividend reinvestment plans and that type of thing is Link Market Services. And of course, the issuer is Betashares. And we know a lot about Betashares. Not only are they a long-term sponsor of the Australian Finance Podcast, but they also have been around for a long time. Australia's biggest provider of ETFs by number of ETFs. Nearly 100 now, I think it is, or just about by the time this goes to air. So they've got a huge number of ETFs already in the market, and I'm sure there are more on their way.
And they've really made a name for themselves in the thematic ETF space as well.
Yeah, but you could also say that that was definitely the first 5 or 10 years of their business, but more recently, they've launched ETFs like A200, even NDQ is probably an ETF that, even though it has a slightly higher fee, it actually is an ETF that most people have in their core. And we'll get to that ETF in just a second. While it is early days, we can share some data from the Perla community, who is also a partner of the Australian Finance Podcast for disclosure reasons. Kate, what does the community insights tell us?
Yeah, it's interesting. Perla community, it breaks down the ETF. So you can go on, search any ETF, and you can look at how many people are investing in it from the Perla community, how much is invested, average investment amount. So the average investment amount in the JNDQ ETF is 1,147. Yep. And the last time a customer invested in JNDQ was 2 days ago. Yep. I mean, it's that granular.
Yeah, it's crazy. But it is early days for this ETF, and you would see people gravitate towards it because of it's in the family, right? It's in the family of NASDAQ ETFs here in Australia. Are there any other interesting data points you might want to call out?
Yeah, I think the other interesting thing is the income of investors in the JNDQ ETFs. So most people have reported an income of around $50,000 to $100,000 a year if they're investing in this ETF. The age groups are quite broad with Perla's platform, but 44% of the people investing in this ETF are between the age of 26 and 34, and 56% 35 plus.
Yeah. Okay. So
and mostly male.
Mostly male. And let's now switch our lens to the NASDAQ ETF, and which we call the NDQ ETF, so the NASDAQ 100. In this camp, you still see a bulge in the Perla data, but what you start to see is a bit more of an even skew amongst men and women. You start to see slightly like flat across the demographics curve in terms of age. You see a much bigger initial investment in NDQ, and that's probably because more people are more familiar with it. It's more established in core portfolios, and a lot more people are trading in it basically every single day.
And a lot more younger investors are investing in NDQ, according to this data.
And it's really interesting because a lot of the people, I was just reading on the Betashares website actually, and under the benefits of NDQ, it says on the website, invest in the way you live, which is a fantastic slogan for anyone that looks at the things around them and thinks, how can I own a piece of that? And in the past, this has proven to be a wonderful way to kind of get ideas for your investment portfolio because you use the product and service. You'll probably know it better than most analysts or other investors. So why not see if the company's any good? And most of us will reconcile the names: Microsoft, Amazon, these types of businesses, NVIDIA, Facebook or Meta, Alphabet, Costco. These are all massive businesses that are all included in that top 100. Tesla, businesses that are changing the world. And the thing that gets me every time about the NASDAQ, I heard this first from Tom Wickenden, who appeared on the podcast a few months ago, but he brought up a stat which kind of blew me away. When most people think of index funds, Kate, they think, it's pretty boring, just does whatever. The NDQ, the NASDAQ 100, so not the ETF itself, but the NASDAQ 100, based on the data to 30th of April 2024, over a 10-year period, has compounded annually at 22%. So that's 22% growth in 1 year, and then next year 22% on that year's investment balance, which includes the 22% the year before, and compounding up and up and up and up and up. 22% growth from an index fund is absolutely outstanding. Like, past performance is not indicative of future performance, as the disclaimer will have to read. But when you think about the companies that are inside it, the Microsofts, the Apples, the Teslas, all those businesses I just mentioned, wonderful, wonderful businesses that are reshaping the world and growing fast, which is unbelievable, almost unbelievable. You can see the data is actually there. It is believable because it's real. So, Kate, we've got, by contrast, the holdings of the JNDQ ETF, some of the names that people may be familiar with, and I'll go over some of them really quickly, and you can throw out any that you like. There's a company called eBay in there, the younger, older, smaller brother of Amazon.com. So eBay, still relevant in many people's lives. We had Monique on the show recently who said that she still orders things on on eBay, sorry, and we were all on the Amazon train. But it is a very popular platform, still growing, still a valuable business. There's another business in the top 10 of JNDQ called Tractor Supply. Tractor Supply is kind of like a miniature Bunnings, but for agricultural people, for people with hobby farms and small farms. It's actually a wonderful business that started many decades ago. And it's one of those businesses like Costco that loves to hire people from within. And it's more of like a family environment and a family-run business, even though it's all across the country.
I thought it was funny. Tractor Supply described themselves as the largest rural lifestyle retailer in the US.
Yeah, so
that's a category.
Yeah, that's the thing. But imagine there's a lot of country in America that's arable land, and people live off the land, and or just have their farms. And they need places like this, right? And so you see these stores everywhere, and they're really innovative in how they slowly and methodically build that business out. And it's been a wonderful business for a very long time. We actually did a podcast with an investor in Tractor Supply, Stephen Arnold, over on the Australian Investors Podcast. So you can go back and look at that if you're more interested. There's another business in this list, which I don't know if you know. Have you ever heard of Axon Enterprise, Kate?
I feel like it sounds familiar, but I don't know if it just sounds like it's something that would be in a Marvel movie.
Yeah, it probably does sound a bit like that. And interestingly, maybe it has been something like that. Axon Enterprise is actually, if not the world's leading, one of the world's leading non-lethal arms companies. So taser weapons, body cams, these types of things for police, security environments, for that type of situation. So non-lethal kind of defense and weaponry. This is the company that's leading the charge. And it's gone to the point now where a lot of police officers around the world will have body cameras on them for compliance and also to understand like the environments that they're operating in. That's then sent to the cloud, where there's a cloud-based system for monitoring and tracking things and in court cases and this type of thing, Kate. And obviously the non-lethal weaponry is actually a really good way to disarm and make the community safer. And so that's one of the world's leading businesses in that regard. So that's also in the top 10 of the JNDQ ETF.
Yeah. Another one is Ulta Beauty, a beauty real estate agent, retailer in the US that sells everything. They've got over 1,300 stores across 50 states in the US, selling more than 25,000 different products. So doing a bit of everything.
Yeah. It's people think because you're going to the next 100 that they might be small companies. By Australian standards, these companies are massive. Like eBay is massive. But we don't think about it like that because, it's not in the top 100, therefore it's not that big. That might be true in Australia. But in the United States, these are still companies that are wonderful businesses.
The scales are very different in Australia versus the US of what they think is a smaller company versus what we think is a smaller company.
Well, I just brought up eBay's market cap, $25 billion US. So I don't know, do the quick math, but let's say it's about 40 billion, give or take here in Australia. That would be, off the top of my head, I'd say that it'd have to be in the ASX 50. So in the top 50 companies in Australia. And you can see it's not even in the 100 on the NASDAQ in the United States, excluding financials. So it's down the list. But what I mean to say is that people that invest in that ETF or the JNDQ ETF are not getting tiny companies. You're getting kind of emerging companies that are coming up the ranks, which is really interesting. Any other businesses when you pop the hood that caught your eye, Kate?
One that I thought might be interesting to you was Monolithic Power Systems, which is an international semiconductor company. Yeah,
well, it sounds interesting. Monolithic Power Systems. There are so many businesses that operate in this ecosystem.
It's a business that's been around for decades and has over 3,500 employees. Like these just companies that you never hear of over here.
Yeah. you think that there's only one player in this, which is NVIDIA. You think that it's the only one, but there are more than a dozen that play in this world, and they all facilitate different parts of the ecosystem. And without them, the system would collapse. And so there's so much more to be had if you look outside the top names. We've obviously heard of things like the Magnificent Seven, which is like the top 7 companies. We've heard of the top FANG companies. We've heard of the top 100, and now we've got the next stage down. And there was something interesting that I'm going to jump down a bit, Kate, to one of the points that you found, which comes from different data that shows that since 2010, a total of 80 of these next generation companies have graduated into the Nasdaq 100, so meaning that they've moved up. Companies that you may be familiar with include Netflix in 2010, Tesla in 2013, DocuSign in 2020, CrowdStrike, which is a sponsor of F1 teams, in 2021, and AstraZeneca in 2022, which many people will be familiar with. So these are really interesting businesses that have slowly and surely crept up into that top 100, and people have been able to benefit on the way up, which is why this ETF exists.
It's interesting. We were speaking about rebalancing on a Q&A. I don't think it'll be out the time this episode goes live, but the idea of being able to hold one ETF and companies slowly come in and come out. And so you don't have to keep buying lots of different investments. You can hold a few ETFs and you get to benefit from the growth of the economy. Yeah,
absolutely. So this ETF, while it's relatively new, the index has been operating for quite a while, which is typical. The company that is probably another one which caught people off guard is MongoDB, which is a cloud-based database company. It's a wonderful business. It graduated from the 100, the next gen, from the next gen, the 1 to 200, into the top 100 in 2023 December. So it's a company that earned its spot as it went up. But these are the types of businesses you're getting exposure to. Companies that, hey, you might see a logo on an F1 car. It might not be the big one. It might not be Google, but it might be a little one that's on there. So you know the company exists. It's slowly building its brand. It's building its network and its overall business. And that's what you're capturing in essence in an ETF like this.
Would these ETFs be used together? So we've got NDQ, our Nasdaq 100, which has our Apples and Nvidias and Amazons and Costco's in it. And then we've got JNDQ, which has the up-and-comers. Would you use these ETFs together?
Yeah, you probably would. Yeah, I think if you were going for an overall Nasdaq exposure, you're going to have a tilt towards technology versus, say, like an established S&P 500 or an all-world ETF. The thing that some people should be aware is just how you blend these with other ETFs. So you probably wouldn't want to have one of these ETFs alongside, or at least not in any great weighting, alongside something that also invests in high-quality companies, because a lot of the Nasdaq companies are also considered very high quality because they're technology and healthcare, which lend themselves to quality. I did notice something interesting about the JNDQ ETF, which is that it's more tilted towards healthcare. It's still got huge exposure in IT and communication type businesses. But the reality is it also has a bigger proportion of its overall portfolio in healthcare.
Yeah, 21% today.
Yeah. So that would make sense, right? NDQ does too, but you've got those massive tech stocks in there. Interestingly enough, Amazon's recent announcement that it would be moving in a big way into healthcare was a really interesting thing. And so with companies like Microsoft and these types of businesses that recognize that move too is a really important shift.
Yeah, I mean, you can look at NDQ and see 6% of the total portfolio is in healthcare, and then you jump into JNDQ and suddenly it's 21%. So quite a meaningful difference depending on what exposure you're looking for.
Yeah, so you'd get more of a healthcare flavor in this. Which would make sense because not all the healthcare companies in the world are the biggest companies in the world. They don't pervade every part of our lives, whereas those big tech stocks definitely do. So how could it be used? You could use this ETF as a core or a satellite, but you would have it as a very small core holding, I would think. I would be more inclined to have it in the satellite if I was going to invest in it, because then you would you'd be effectively investing in it like it's a global small cap for me. So the way I think about it is you'd be getting hopefully decent growth over time, but you would be also getting, the technology exposure, which is going to kind of magnify the growth focus of the business, of your portfolio and the businesses that are in it. So I would be more inclined to have it in the satellite, and it would be a little bit higher risk, more volatility, bouncing up and down. If you had NDQ in your core, that could be a good complement. You could also use NDQ as a core or a satellite holding, depending on your view on things. My probably cautious word of warning, it's not like I'm not predicting anything, but what I would say is that 22% growth from any index fund is a lot over 10 years. So just be mindful, just because we mentioned that in this show, it doesn't mean that for the next 10 years it's going to be the same. I would always, always, always diversify these two ETFs. I'd have some bonds, Australian shares, companies from either emerging markets or Europe. I'd also have active funds alongside them. I wouldn't just have it all in these types of things. I think that's too much concentration for one investor.
Would there be any overlap if you had an S&P 500
Yes.
ETF already?
Yeah, definitely. So if you had a S&P 500 ETF, you're going to get things like Apple, you're going to get things like Microsoft. You're going to get those types of businesses in there. So you're going to have a significant amount of overlap with probably more so the NDQ ETF.
Yeah.
You would have a little bit in the tail with JNDQ. It's not to say you can't use them all or some of them together, but you would have that exposure overlap. And once again, you can check that on some of the providers' websites. You can drop into the holdings and see what's in there. Even if you just check the top 10, you would be able to determine, is this overlap significant? Mm-hmm. And what I mean by that is if you see the names of Apple and Apple in the top two, you probably know that there's going to be significant overlap. So you just want to manage that accordingly.
Yeah.
I think a lot of people will use the S&P 500 or a global ETF, like a general global ETF alongside NASDAQ. And then they would kind of tilt their portfolio towards a technology company saying, I want global exposure, but also I do think that the NASDAQ has the best companies in the world. And I think it's going to stay that way. So I'm going to tilt my portfolio towards it by also including the NDQ ETF in there. And I think that's a pretty popular strategy for a lot of investors in my experience.
Yeah. So very easy to buy either of these ETFs. We've got lots of episodes that help you open a brokerage account, step you through how to compare different brokerage accounts. Mm-hmm. So there's lots of ways you can buy these ETFs, lots of different brokerage accounts. We have some series on that. So I'll link them in the show notes and how to set up your share registry so you make sure you can get your dividend paid to your bank account or reinvested, depending on what you choose.
Yes. And Betashares does make that easy through Link Market Services. Basically, all the ETFs go through Link Market Services. So, if you own a Betashares ETF, you've got to set up a Link Market Services account so you can manage all of that. I would also love to hear your questions. We did get quite a few questions on these ETFs through social media and these types of things recently, as well as some of the other Betashares ETFs. We love to hear your opinion on these things, what you think about them. Are you investing in them? What do you think of JNDQ? You can let us know on social media, or better still, you can jump into the Rask community and just make a post about it, and then the team will see it and we'll give you our 2 cents and you can have a conversation over there.
And if this is the first episode you've ever listened to, hearing the word ETF for the first time, don't worry, we've got a whole mini series that walks you through all of the basics of ETFs, exchange traded funds, what they are, how they work, how you can compare them and do your own research, and how you can invest in them as well.
Yes, it's a very, very gentle and easy way to learn about ETFs. It's all available on YouTube. We also have a free ETF investing course, which you can take to level up a little bit there too. Well, Kate, this is the JNDQ ETF. It's the NDQ ETF, both from Betashares. They're going to be interesting to see how they go. Obviously, NDQ's established track record. JNDQ is just getting started. Really appreciate you taking some time to do the deep dive with me.
Thanks for listening, everyone.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.